Hello, active traders, and welcome to How to Trade Winning Breakouts and Pivots. I'm Ken Calhoun, president of TradeMastery.com, and I'm joined with my longtime colleague of over 15 years, the one, the only, Steve Nison from CandleCharts.com. Steve, it's a pleasure to share the stage with you here tonight.
Great, thanks, Ken. It's great being with you as always. We've been doing this a long time.
Yeah, it's been great. And so many traders have benefited, so it's really been exciting to see the impact of our training on the world's traders, right? It's really neat to see the positive feedback from everyone. So
Right.
So we've got some really good techniques to lined up for everybody tonight. Really excited to share current market charts with you. For example, just a quick sneak peek. Look at this one, GBT. I'm going to tell y'all what I like. Multiple things. We got a bullish engulfing down here. We have a moving average cross over here, a tall green signal candle there, a golden cross breakout there, a nice bullish cut breakout here. And this thing doubled and over doubled in price from 16 to 35 and a nice 45-degree angle breakout. Those are the kind of charts that you need to be aware of how to trade to make it as a trader. Strong charts with tight stops. And a quick risk management tip, I will scale out. I've traded over $6 million worth of stocks and ETFs. I get out of my trades if we lose 2 days of aggregate support. So if I were long here, I'd put a stop at 35. Anyway, these are the kind of charts that should whet your appetite and get you excited about trading. These are the things that wake me up and get me going. Hey, Steve, any quick comment on this chart? Because I love this chart. The bullish engulfing was the first. So if I got that right, it looks like a bullish engulfing. You're the expert, but and it crossed above all three moving averages and then continued on up. But that was the first start of a 20-point run in this stock.
Right, exactly. And what's great is, like you said, it ultimately crossed above all three moving averages. But although we as part of our education, we talk about the importance of Western technicals in combination with candlesticks. There's a wonderful example of the power of candlesticks, because very often you'll get a candlestick signal well in advance of a Western signal. So here we got an early potential sign of a turn of a bullish engulfing pattern well before it got above the three moving averages. So That's what those early reversals are all about.
Yeah, the candles are brilliant. Nothing in the world beats that. And you're the world's top expert on candles, so it's always great to work with you on this. So let's get underway, folks. We've got a lot of exciting things. I will do the first 20 minutes, then Steve will go for 20 minutes, and then we'll share the stage together to let you know about how to continue the education with us. As always, all information is for educational use only. We're not making any advice or recommendations about what to buy, sell, or hold, and by watching this, you agree not to make actual trades. Bum, 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 bum. Regulatory Compliance 101. You guys might have seen me for the last year and a half in Stocks and Commodities magazine on my Trading on Momentum. Speaking of Golden Cross, we just had one in that stock, eh? So you may have seen me featured there or at the Money Show as one of the featured speakers. I always like seeing traders in person. I'm a real money trader with P&L proof that I actually can trade, and so that's always exciting. What you're going to learn tonight in the remaining 17 minutes is 2-day in versus out trading, wide range candles and cups, gap continuations, cup breakouts, and ADX entries. So let's get on with it and take a look at some charts and what makes them exciting. Now, Steve mentioned the candles do such a brilliant job of identifying early entries. If you'd waited for the Western, I'm a breakout trader. I trade millions worth of breakouts. I would have waited till 20 and a half or so, right? But this would have got you a signal in around 16 and a half for 4 points of additional profit earlier in the run. So that type of early signal is good. The good news, the redeeming feature about great breakout charts is that you got multiple chances to get it right. And I think one of the things that in working with so many thousands of traders, many traders are afraid that they'll be the bag holder at top, or they'll be stuck buying a high and then get stopped out and lose money. What you'll find is it's all about stock selection, and you need to find the strongest patterns that work. Here's another quick pattern I'll give you. My very best patterns. I do so much broadcasting. I get excited about this. When you see a sequence of 3 whole real body candles increasing, particularly when it's above a prior resistance like a cup pattern high or above moving averages, that often dries up supply and leads to an increase in demand in the share price, so it'll run up. Here's another one. This is what I call kind of it's an inverse 3-line break type pattern, but what I also like are these large green signal candles where you've got a large, especially big candle that lifts price up, in this case, say 29 to 39. Let's look at more charts because I've got a lot to share with you tonight. One of the things that I want you to learn from me too, and you'll learn more about this in the system that we've got available is wide range candle at the right side of a bullish cup. And a cup is simply looks like the letter U or the letter V. And whenever you see a large candle, especially with high volume, larger than average volume, at the right side of a congestion area or a bullish cup, that will often frequently lead to an explosive upside breakout, which is continuing as we speak. You can see here there's three, excuse me, I do a lot of broadcasting. We got three increasing whole real body candles here. And I call these baby bear, mama bear, papa bear. And even though that's a doji, we still have an increase in momentum. And so price action has gone from this all the way from 25 to 40, 15 points. One of the keys to successful trading I found, and I've made every mistake in the book and then some, as well as every winning trade combination in the book. And what I found is it's much more important to look at the math than simply the chart patterns. And what I mean by that is your P&L management is absolutely vital. And you learn about that in our training. But one of the things I will note is that always pay attention, always pay careful, specific attention to how many points of range there is. And this is a 90-day candlestick chart. What's the point range? In this thing, the range, total range is what, 17 to 40. So you got lots of points of range where traders get into trouble. And you may have realized this in your own trading, is if you're trading something choppy, I always pick on AT&T. I don't know if it's done anything lately. Nope. So for 15 years or 18 years and I've been telling traders, AT&T is a horrible chart to trade. And it still is, right? They don't change their color. Its range is 40 to 43, less than 10%. It'd be really tough to trade this and make money, right? You need to focus on breakout charts that have good explosive runs. And not these cheap $3 or $4 penny stocks. Those will just blow up your trading account. Ask anybody. Cheap stocks are, leverage works against you more often than not. What you want to chart, or at least what I trade, is things in the $15, $20, $30, $40 share range on balance. Most of these are under 50, 60 bucks a share. So you can make your money work for you and have explosive breakout potential as well. Notice too, please, this pattern, large green candle, high volume candle. You probably didn't trade it, but you had 15 points of options to trade it to the upside, which brings up another point. You can use the patterns that Steve and I teach you in the stock trading success system if you're a directional or any kind of options trader, but especially on directional trades. You can use these for options too. We've got many options traders who have been thrilled with the course training as well. Anyway, bullish cup, looks like the letter U, large green momentum signal candle. Somewhere above that makes sense to start working into your trades. And I speak on these when I speak for Money Show and my channel partners with the various charting software companies and so forth. We've got a hammer here, so a loss of that would be the maximum. If I were long this, I would put a stop at 29. If it got under 29, I'd get out. That's the technical reason to sell. That's one thing I've learned so much from Steve Nison over the years is how to combine the P&L management and the trade entry and exit decision making with candles to deploy that into a trading plan that makes sense. And so I'm his biggest fan because what he teaches works. And so really thrilled to be working with Steve all these years because it's consistent and it makes sense. Anyway, one thing that really makes a lot of sense too is to trade charts with good wide ranges and consistent trends. What you don't want is a chart with this kind of range that goes up and down, like a basketball bouncing on a court. You want something with a nice 45-degree angle breakout continuous trend. Here's another one. If you do trade cheap charts, which I advise against, it's true. I've lost the most money in my trading career trading cheap under $15 stocks. And that's just me, but I found that I do better in the $20 to $30, $40 share range instruments. But anyway, steady uptrending channel. It's holding steady above all three major moving averages, which is nice. Got a minor window or a gap, which is great. That's my favorite pattern. I know Steve's too. Is the gaps are the best patterns available to us as professional traders. That's a good signal day. Odds are you missed it. That's all right because you got another shot if it takes out 12, which is another Western signal. You may be aware you should always use whole number as kind of a default resistance setting, especially on the cheaper stocks. So you would not in a million years buy this for a swing or a day trade between 11.50 and 12, but I'll be all over it, say 12 and a quarter. I'll likely buy it at 12.25, 12.30 if it continues on up. Another chart in our playbook is looking for things like, if you see a hammer at a 50 moving average or a other moving average. I believe Paul had mentioned this as a favorite pattern too. If you see a hammer at a moving average and it sits there and rests, that's often a good pivot. And I completely agree with them. It's a very good pivot. I don't play pivots, I play breakouts. So I wait for strength to buy. I specialize, I spent my life's work buying high and selling higher, which brings up a good point that I mentioned to so many hundreds of folks in my other events. Look at yourself as a seller of stocks, and you're trying to buy wholesale. All right, you're not trying to spend all your life figuring out where to get in. The more important determinant of your success as a trader from a profitability standpoint is your exits. And so always keep your stops as tight as possible, and look at yourself as a seller of stocks, kind of like a retail seller. You bought it wholesale down here because you got the candle pivot. Maybe you bought there, which would be the candle pivot signal. I'd wait till there. You'd make more money if you took the candle signal, or still make good money if you took my signal. It ran on up nicely, okay? But look at yourself as a retailer, and if you see, say, a shooting star or a bearish engulfing, or especially this configuration, which I'm grateful to Steve for teaching me all this stuff. You got a shooting star, which is the first candle of a bearish engulfment. If that is in fact a bearish engulfing, that's a good sell signal, right? So that's a buy signal, that's a sell signal, and it's tied up for you with a bow on it. A gift from Wall Street. Congratulations. Tell them what they've won. Boom. And you're making these kind of trades over and over again as a professional trader. Let me change channels right briefly. I've got only 9 minutes left. ADX, Wilder's Average Directional Index. I've published and spoken on this for years. One of the things that I like is if the red ADX signal line breaks over 40, which it did right back here on this day, you go long, say 50 cents above the high of that signal. And that's a very simple, easy to follow signal. And I don't use the blue and green DMI lines. I only use the red signal line. And I use it, in contrary to how a lot of traders use it, I use it as I buy the volatility. It's what I do for a living. I buy volatility, right? I'm a volatility breakout trader. I'm one of the top breakout guys. And so ADX breaks and pierces and holds over 40. I'll go in long on a day or even 2 or 3 after that signal is generated. So from an ADX standpoint, that's one that's worth putting in your playbook. I don't use derivative signals much. I used to be a corporate statistician for the Ford Motor Company. Best company I ever worked for in my life. Great people at Ford in Michigan. Cold winters, but warm hearts of good people. Anyway, the point is, when ADX pierces and holds over 40, that tells you got increasing volatility, much like a volume knob on a stereo. And so that means you want to play around with it or go long after that ADX over 40 signal is generated. So that's that's 2 minutes on ADX, and that's all you need. I mean, trading doesn't need to be rocket science. It needs to be price action based using Western technicals and candles. And when you combine them, like what Steve Nison and I teach you in the Stock Trading Success System, you've got a very popular, very strong combination of intelligent, strategic, step-by-step entry patterns that can really do well for you. So there's applied materials. Anything wrong with this chart? I don't see anything wrong. Here's another quick tip. Give preference. I specialize. I spent my life's work figuring out how to avoid false breakouts and get in on the ones that actually run. Here's another quick tip. Look at your last 2 weeks of daily candles. Give preference to these charts where you have at least say 70, 80%, 7 or 8 out of 10 are green. All right, that's just kind of common sense, but it tells you got a continuous stream of buyers coming into that instrument. If on the upper right side of your chart you see half the candles are red, don't trade it. Just give preference to these charts, like so many of these where most of the candles are green lately. Kind of like I used to be a consultant. I traveled the world helping big companies with their quality management efforts, and I spent a lot of time in airports doing those puzzle books. This is back before we had cell phones back in the day. I'm 53 years old. How the heck did that happen? Anyway, look at it like the puzzle, the answer key to the puzzle. You know, you're trying to solve these word search puzzles, and that's where that word is hidden. You're looking for the strength of the candles to give you a continuous story of buying and selling pressure. So for example, this chart, ABT, I don't like this chart much for a breakout as a professional breakout trader because it's got a checkered immediate past. Never mind the fact that it got all these buyers, that's nice, but unless you've got a DeLorean and you can go back to the future, or you've got a TARDIS if you're a Doctor Who fan or Whovian and you can go back in time, the rest of us have to play with the upper right side of the chart. And so because of this congestion, it's an inferior chart because of the significance of all these red candles. Is it still in an uptrend? Yes. Is it still worth buying up at new highs? I would say no, because there's better fish to fry out there. There's better charts out there that have a history of stronger recent buying pressure in them, of which these two are the most strong, GBT and PTLA. I got just 5 minutes left, so I got to wrap soon. Here's my favorite chart pattern, and I like the Japanese phrase that Steve taught me called the window, also known as a gap. I specialize in buying gap continuations. 50 cents above the high is what you want to use. You don't ever want to trade the day after a gap usually, because that's usually a resting or consolidation, or as our dog is called. We've got a Shih Tzu, and I call her Doji because she's very uncertain. She chases her tail. Ruff, 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 ruff. Well, same thing with the candle. It's not going anywhere fast, and that's often the case on the day after a gap. So I will add 50 cents on these $30, $40, $50 charts. It's kind of an arbitrary price action trigger to avoid a false breakout and get in on the continuation move, which may occur a week later after the gap, as this one did. And it ran up a couple of points, so that's good. And I'll still buy this up over 37. Again, use the whole numbers as a key kind of a default resistance threshold area. Anyway, I look at these, I know the one thing I learned from Steve too is the Japanese candlesticks are always very visual, like storytelling. And so if you look at it like a window, you could use this if you want, Steve. I like that. I like to look at windows as like the window to my house, and a bunch of $100 bills float in, right? So it's the window opens and cash comes in. You just buy the high above the window on a continuation plane. Those often continue in trend. Okay, and if they don't, let's say you got a gap here, you got a tweezer top and two almost shooting stars. You got a couple of bearish upper shadows. I would have told you that's not a good one to stay in because you had ample storytelling of sellers in the house, so you get out right here. This one continued on up to new highs. A few more charts. Linear. Okay, warning, Will Rogers. We've got a shooting star, so we don't buy here, even though we got a couple of hammers here. Day trade, you might want to go in here, but personally, when in doubt, stay out. And a really good, sensible entry and exit strategy is to wait until new highs are taken out. So personally, and I use 50 cents above whole numbers for these, so I'd wait till 54.5 for long and linear. Network appliances, also a nice big runner. Lately, it's quieted down here, but if it does continue up, this is the type of chart that you may want to consider because of the point range and the volatility in these. So we've got such good charts to work with. Your challenge is to narrow the focus. And kind of two quick final thoughts, one on sectors and one on day trading. One of the things that we teach in the stock trading success system is how to use, one of the things I teach in the system is how to use sectors. And they're so important that you focus your energy on the industry groups that are especially strong. Pharmaceuticals have been the single strongest sector ever since early February. Water run, right? It's gone from here up to there and hardly any red candles in sight. So the pharmaceutical sector and kind of second place goes to biotechs, also really strong sectors. Nice bullish engulfment there that took out new highs above the moving averages. So understanding the power of sector-based trading to help you scan for good trading candidates really makes a lot of sense. And that's one thing that you'll learn in the stock trading success system. And before I turn it over to Steve, I've got 2 minutes left here, or 3 minutes left. I'm 100% always on time. One of the key strategies for effective trading is avoid what I call in charts and trade instead these type, like Clovis Oncology. This ran from 59 to 74 on a 2-day basis. Now this is maybe not for the faint of heart or for newer traders, but for experienced traders it can be a real gold mine because of the point range. You get in somewhere 60, 63, you get in late at 65, out up at 70 or 72. You got many points of range even on a tight time interval. One of the, 2-day basis point. One other thing, and again, a gap continuation runner on these charts. I'm just going through my top list here. Bullish cups are good, but one of the things that I advocate, if you go back over your last 20 stop losses, you will find, I'm completely convinced after surveying thousands of people and hundreds of my money show appearances too, is charts that are entered inside. This is my parting tip before I turn over to Steve. Charts that you should not trade when something is inside the prior day's range. And you should not trade when markets are inside the previous day's market for that matter too. It's best to wait for breakout above the previous day's high because then and only then is it likely to attract institutional buy programs. I've got a lot of institutional clients and I hear the inside scoop on dark pools and liquidity and algorithmic trading, and they use OHLC, open high low closed data, and Boolean operators and all that. And it's, if then conditionals. If we are above previous day's high, then we start to buy, and that's why you always see a volume spike at a 2-day high. But if you're chopping inside the prior day's range, stop the madness. There's got to be a better way. Do not trade. Thou shalt not trade inside days or inside previous days ranges, because often they will stop out. Instead, wait for a 2-day high breakout to avoid the fake out and get in on the very finest chart patterns possible in your trades. So good stuff. All right, well, let me turn it over to Steve Nison. Let me pull up Steve's charts here, and we'll get underway with Steve. But Steve, any quick thoughts on the benefit of learning from us with volatility and combining the best of the East and the West? And the candle patterns with good Western technicals really gives traders not only the first chance with candle reversals, but a secondary opportunity to get in on winning trades with good, strong Western technical breakouts. And that's the beauty of it, the elegance of it. It's not a one-horse show or whatever. It's you combine the best of both of us, and we're able to put our heads together to help traders identify the very strongest, finest, more potentially consistent entry signals available.
Correct. Yeah, it's not only the best of the East and the West, but you really have, at the risk of being immodest, is not only the best, using the best of the East and the West, but you have the best of the person teaching your candles, me, and the best teaching Western technicals, especially intraday you. So it's the best of the best for
Okay.
East and West. So
yeah, to help the traders. So it's all in service of you guys. It's in all of our shared interest in the trading industry to help you guys not screw up and blow up your accounts. I'm saying this to the thousands of you watching in the YouTube video in years to come, as well as here, all of the hundreds of you here tonight. Big epic turnout too. We have 678 of you guys. So thanks to all of you for being here. It's in all of our shared interest, I think we can agree, is for you guys to make as much money and to lose as little as possible, and for us to get you there sooner rather than later. So it's all in all of our shared interest. We're all rooting for you, because only if we make you successful will you still be working with us 10 years from now, like so many of our traders have been. So that's one of the big, shared benefits is we're all in it together, trying to help all of the world's traders become more successful, because then we can continue to work together for many, many years. And you guys don't blow up your trading accounts and go off to, I don't know, do pottery or gardening or something like that. But instead, you still stay active in the game of trading, because we've given you a specific edge that you can work with. And speaking of that, let me turn it over to Steve Nison, because he'll give you the edge in how to harness the power of intraday candles for both swing and intraday plays coming up right now.
Great, thanks so much, Ken. Yeah, and this was a very nice quote from one of our students. Referring back to, as I just mentioned a minute or two ago, working with the best of the best. So with that, one of the reasons I'm so excited with working with Ken, one of his specialties, he's like a multi-talented specialist in different areas, but the one that we're going to be focusing on, or the one I work with Ken most closely on, is intraday. And so what we've designed, and Ken will give you details later on, is an educational, very detailed but very easy to use educational resource on how to use candlesticks and intraday technicals. So if we go to the next slide, one of the things that I designed in this webcast is the many advantages of using candlesticks on an intraday chart. Now, I also made reference, early on in this webcast, or for those watching the video, about the early returning signals of candlesticks. And that is especially true not only on daily charts, but intraday charts. So while we won't have time to go through all of these bullet points with specific examples in the short webcast or video, one of these are actually some of the main bullets that I talk about in my educational resource, and why intraday candle charts are so advantageous. You're going to get early reversal signals. You'll find what I call hidden support and resistance. You can, many of us will feel, just looking at a daily chart, if the market is overbought or oversold, in other words, overextended. But many times it may look that way on a daily chart, but by looking at an intraday chart, you'll see it's really not. And what that means is it could help you from trying to take a counter position. In other words, you view the market on a daily chart being very overextended, it's going to correct, but yet there are strategies to use on an intraday chart to say, hey, it's really not overextended, and this can go on for a long, long time. So that's another major advantage of using an intraday chart. And the last bullet, secrets of using daily charts to boost profits and lessen risk for intraday traders, intraday trades. So the goal of my portion of the detailed education is not only showing you how to use candlesticks for those who trade intraday, but also for those who normally use daily charts, how to use intraday to improve timing to increase your profits and also lessen risk for based on your daily chart. So let's look at a couple of examples of these. So we're going to look at using intraday candles for early reversals. So here we have on the left side, this is a classic hammer. This is actually we would call this a strict criteria hammer. For those of you who have our software, we have what we call classic candle signals and strict criteria. And strict criteria are candle signals that are more strict, and as such increase the odds of a reversal. So this is a hammer. Now a hammer can have a black or white real body, but think about this. This is a white real body that closed right near the high of the session. So this to me would have a greater likelihood of reversing than it would be with a black real body, although both, that is a black real body and a white real body, would be hammers. But while this was a great hammer, the point is by the time, and let me backstep, one of the disadvantages of using the candlesticks is you need to wait for a close. Remember, the candle line uses the same line as a bar chart. Open, high, low, and close. And that's why you could use all of Ken's strategies, Western strategies, in combination with candles. But the point is you have to wait for a close. But there's nothing that says you have to wait for a close on a daily chart. So while the close on the daily chart gave us a reversal a little above $53 with the hammer, going on the intraday chart on the right, we also had another hammer. And this time it was a black real body, but nonetheless, it's a perfectly acceptable hammer. And by waiting for a close on an hourly chart, we got an early reversal, $4 earlier than we would have with the daily chart. So, you're looking at a $4 earlier potential entry on a $53 stock. You're looking at just an extra 10% by buying it on that hammer based on the intraday. Now let's go to the next slide. So here, really no bullish candlestick signals. We have a couple of green candles, which are the same as the white candles, but no bullish engulfing patterns or hammers. But if we look at this time frame over these 3 or 4 days in the 665, 670 area, and we look at a 30-minute chart on the right side, you could say we're getting volumes of visual information based on the candles. We have a bullish engulfing pattern that Ken's highlighting. We have the hammer on the first blue arrow. So not only is it holding a support area, but now we're getting bullish confirmation with candlestick signals. And you don't see this on the daily chart. So once again, getting early reversal signals based on the intraday chart. Even if you normally trade with the daily chart, I strongly advise use the strategies that you're going to learn from us to look at an intraday and see, as we do here, a potential buying opportunity that you would not have seen on the daily chart. Now, one of the bullet points I had mentioned in my second slide is finding hidden support and resistance. What do I mean by this? Let's look at the next slide. Oh, so sorry, we have another, before I do that, there's another confirmation, but finding hidden support or resistance. So it's, again, showing you the same thing as kind of the prior slide. Here we have a support area, but no bullish reversal signals over here. But look at the intraday chart. Okay, this time it was a 60-minute chart. I think the last time I showed you a 30-minute chart. So here we have a series of, here a little bullish engulfing pattern on the first blue arrow, another bullish engulfing pattern on the second blue arrow, and a classic hammer on the third blue hammer. So clue after clue after clue that you just don't see on the daily chart. So now if we go to the next slide, and here's where we will talk about hidden support or resistance. So here we have a strong rally, and looking at this chart, we would say, hey, where's our first support area? And most of us, I think, would agree a little above $78, right? We got down there in April a couple of times, early April, April 10th or 11th, and then the 14th. But one of the tricks that you'll discover, one of the many tricks you'll discover in the education, is using intraday charts to find those hidden support or resistance areas. So what we're going to do now, this is a daily chart, and there's really no support until a little above 78. Let's look at an intraday chart on this day with the tall white candle, and that was April 15th. And so that's this is a intraday chart, and notice the multi-tested support right around $82 on April 15th. You don't see that on the daily chart because the daily chart is comprised of the open, high, low, and close based on the daily action. Okay, here we have an intraday chart, and it might be a 5 or 10 minute chart, I'm not sure, but here we have multi-tested support right around 82. So now what we could do is, if we go to the next slide, we could show a support area in that $82 area. Now, there's no way you would have seen this on the daily chart. But by zeroing in on the intraday chart, we then got a potential support area, and look how nicely it held, and then the market rallied. So this is what I call hidden support or resistance. Let's look at another example of that. So here we have a rally, and let's say where the arrow is, where do we have first support? And like the prior market, the prior slide, we'd look at the recent lows, which is fine to do, but we may want something before that. So here we're looking at $22. Let's go to an intraday chart. So here we have an intraday chart, and by the way, this is one of my favorite Western signals. It's called change of polarity, and it's where old resistance, multi-tested resistance, once broken, becomes support, because once the market breaks above the support area, it's up to the bulls to defend their territory. So notice how that old support area, around 2340, became support, and look at that nice rally the market had after that. So on the left side on the slide, that's where we got that that arrow at that red, the red horizontal line at 2340. We didn't get that support based on the daily chart. We couldn't see a change of polarity on the daily chart, but it was clear as a bell on the intraday chart. So once again, even if you normally use a daily chart, this is very valuable information on how to get those great timing signals to enter and also exit the market. So let's go to the next slide. So, you know, it's, and Ken made reference to this early on, it's knowing when to get out that's critical. The way I like to think about it is when we're entering a trade, we're in control. Okay, it's up to us to do the timing. We could sit around and think about it and do all the analysis. But once we have money in the market, we don't become proactive. We become reactive because we have to react to what the market is doing. And one of the great things with these strategies is you'll learn when to exit, because knowing when to get out is just as important as knowing when to get in. So with that, let's look at an example of this was the S&P before I'm sure you remember the really big decline last October. So once again, the goal here is to show you the early turning signals of an intraday. So here we had, this is a daily chart, and we're going to look at an intraday in a minute. This is a daily chart. This is a classic and very rare abandoned baby top. Essentially what an abandoned baby top is, it's an island top that's a doji. So the market gaps up or forms a rising window and then gaps down. And the middle portion of the island is a doji. And this is very close to being a doji. Okay, a doji is when the open, high, low, and close are all the same price. I'm sorry, when the open and close are the same price. So there's an abandoned baby top and a confirmed resistance. So this is a real warning signal. But let's say, you were nervous because the market was so strong up until that point. What you could do is, let's look at an intraday chart during this time period. This was last October. And we could see on the first blue arrow, we have a bearish engulfing pattern. And one of the great things about the candlesticks is many of the signals can be used as support or resistance. So you could draw that horizontal line. And at the time we had the abandoned baby top on the daily chart, which was October 23rd with that horizontal blue line, we also had a bearish hotomy. That's a small real body in an unusually long real body. And that confirmed the resistance area. So even early on in that session, even before you had to wait for the close, because the close of that session was, let's say, 2187, right around the 2192 level, we got an early sign of a potential turn. So that could have been a great time to think about exiting. Another way to trade this, because Ken is more a momentum trader, is you could use this as resistance, and if the market closes above this resistance area, you can then go long. And then what's your protective stop? Remember what I was talking about, change of polarity? Old resistance can become support. So you can use candlesticks not only to know when to exit, but by learning how to use candles, support, and resistance. In this case, resistance. Let's say you're fundamentally bullish on the market, and you want that confirmation technically. You could wait, and you should wait. You want the technicals to line up. Wait for a close above 2194, or maybe the round number 2200. Ken and I like those round psychological numbers, and then you could do a momentum trade, buy it, and have a protective stop under the change of polarity under 2194. So here, in this example, we're looking at exiting, but we know the market is going to turn. It can't go up and up and up. We're in uncharted territory, a tremendous rally. I don't think we've ever had a rally in the equity market for as long as we've had without at least a 20% correction. The correction we had a while ago was only 10%. Ultimately, we're due for at least a 20 or more % correction. It's going to happen. It always does. And you need to be prepared to not only know when to think about exiting a market, to lock in profits for your longs, but also take advantage when the market ultimately does decline. And the fastest way to take advantage, to know when the market's going to turn, to jump on it before the rest of the crowd sees it, is with candlesticks. So if you can go to the next slide. So you could actually, profit tremendously by knowing when to jump on the short side, do a bearish trade. Now, it's very hard to sell short in the equity markets, but what you could do is take advantage, if we show the next slide, of ETFs. And an inverse ETF, essentially, as the market goes down, the inverse ETFs will increase in value, and there are ETFs on the Dow called the dogs. There are ETFs in all the equity markets, on the S&P, the NASDAQ. So this is just something to keep in back of your mind, and a really important reason to strongly consider the resource that Ken will be talking about in a couple of minutes, because it's not, what's the saying, a rising tide lifts all ships, and we've been in a bull market. But this is not going to last, and you want to be prepared. And I know I'm repeating myself because it's just so important. You want to be prepared to know time to get out of your longs, and time to take advantage of the down move, because the market moves down a lot faster than it moves up. This is one of my few non-Japanese proverbs, but the proverb, and I don't remember its origin, but I just love it. It says, "Fear does not ride out on a donkey." You want out right away, and that's why you can make the biggest profits on down moves. And that's why I wanted to give you a little heads up. I'm sure many of you are aware of the inverse ETFs, but you could use the intraday ETFs just as you do intraday with equities and the indexes. So everything you'll be learning from Ken and myself could prepare you for when to take advantage of the down move, which will be coming. Sooner or later, it will come. So with that, I'll turn it over to you, Ken. And we're going to, you want to discuss the bonus, the next slide, or should I?
Yeah, sure. Let's go ahead and do it.
Okay.
With your order, the stock trading success system, Steve has graciously included a couple of really high value bonuses too. So here's the first one.
Yeah. And what I'm going to do is, and I charge big bucks for this, but we're going to do it, as a bonus. Essentially, what you're going to do is send me whichever market you want me to analyze, and I'll analyze. It needs to be a U.S. market of your choice, and I'll give you my outlook on it, where I think it's going, support, resistance, if you are thinking of buying it, where you should set up protective stops. So it's really a customized analysis, and we're going to be doing this as a webcast. But don't worry, if you can't attend, we will have this as a recording. So you'll send me whatever market you want me to analyze. I'll do it. If you could attend the session, fine. You could ask me questions real time. But if you can't, we'll be sending this to you as a recording. So you're going to get my own personal analysis, as though how I would be trading that market. And you could use that to set up a trade. What you learned from me, two ways. One, to set up a trade the next session, and two, even if you're watching the video or you attend the session live, even if your market, we say we do your market and maybe there's 10 other markets and you don't trade them, it doesn't matter. You're going to learn, you're going to get educated. You're going to see how I analyze the markets, even if it's not ones you personally trade. So you can apply these strategies to your own trading education.
Yeah, and it's an outstanding value because, I spend a small fortune. I spend many thousands of dollars a year on my own personal. I hire the world's best, whatever field I'm working with. $300 to $500 an hour is what I usually pay the best guys in the world charge. And here you're getting Steve at no extra cost included with the system. Now, before we move on, because we got some exciting things to look at, one of the things I want to show you is just an example of a couple of the inverse ETFs, so you can see what we're talking about, and also the upside potential in those guys, because the market has dropped quite a bit. SDS is one I trade, QID is yet another, and you can see these things were up significantly higher back during the 2008 market sell-off. This was split adjusted $1,400 a share. This is the QID, the inverse Qs ETF, and you'll be learning how to trade these too as a part of the system. Even a bearish engulf here, pick the right exact top on that thing. Anyway, and currently on sale for the low price of just $19 a share. During the crash, this guy had been up at 1,000 a share. So there's huge leverage to be had in these inverse ETFs if and when the market does finally, which it will at some point, crash. So whether you're a directional trader or a reversal trader looking for breakouts or pivots, we've got you covered. Now, let's take a quick look here at a resource I've got for you lined up. And here we go. All right, now, a lot of you have been with us for quite some time, and we appreciate it. We appreciate the loyalty. Many of you have been with us for many years. Thousands worldwide have trusted Steve and myself because together we like to help traders as a team. Our combined techniques show you the best of what we've got for you. In kind of a cartoon here we had made up, your profits could potentially go higher with two of us working together, as a team. So we're going to look at how this works together. Just a quick credentializing thing. Steve, the reason I like working with Steve too is he's a world authority. He's not one of these mini educators that's kind of a second string. He's a top shelf, one of the world's top educators, Steve Nison. He's worked with the Federal Reserve and NASDAQ and JP Morgan and Goldman and the NYSE. Best P&L is 17. I'm a real money trader. I don't trade, millions of dollars in a single trade. I'm happy if I can get 600 or 16 grand or whatever in 4 million worth of trades as a trader. I'm happy with these kind of trades. I don't know about y'all, but let me ask you, how many of you are day traders? How many of you are swing traders? Or how many of you do both? If you would, at this particular point in time, type in the word day, swing, or both, because we've got something for all types of traders with this system, but it'll help me tailor what I'm about to say to you depending on the majority of what you trade. Most of what we cover here is how to do swing trading. I would say maybe 70–80% of it's for swing traders, but a lot of intraday strategies that Steve showed very professionally, a good way to combine intraday. If you're on a lunch break and you pull up your charts, we take a look at what's going on. Now, let's start off. Here is a quick tip. So far, we're off to a great start, and I wanted to thank all of the hundreds of you for joining us here tonight. And we've covered a lot of ground so far. And now you have awareness and information about trading that you didn't have, 30, 40 minutes ago. But there are still two important problems that you and I have to deal with together. Stop the madness. There's got to be a better way. I'm not Mr. Wonderful, I'm Mr. Breakout Trader, so I'm going to take just a minute to help you solve them. First, there's the way that our minds work. That is not very well, especially the older you get. So we've got two problems before we tell you what we're going to do for you. The first thing is, based on what you learned tonight, 48 hours from now, you won't even remember most of what you learned tonight. And a week from now, you won't even remember being here. Let's be honest. So, like Get Smart, you'll say, missed it by that much, or sorry about that, Chief. So because our minds can only remember so much, you're probably really busy. So let's get to the point. The second problem is it's simply listening to ideas and information, like what Steve and I just shared with you. It's interesting, but it's not enough by itself. That's kind of the downside of even a really good event like this one, is awareness and new ideas without tools only creates frustration and only a little bit of value. Kind of like a golfer needs golf clubs or a surgeon needs a scalpel. So to actually trade stocks the right way, at least in my own experience, you really need tools and training like what you'll be getting in the stock trading success system once you make the decision to own it for yourself. Because, if you leave this webinar with just a couple of new ideas but no tools, it's like going to a golf course without golf balls but no clubs. That ends badly. Kind of like the great movie Caddyshack. And no. You don't want to just throw the ball at the hole. You want to have the right clubs to hit the ball and be at least a scratch golfer and be at least a scratch trader. So the good news is that Steve and I have co-developed one of the most popular stock trading systems in the industry, and you can get your hands on it at a huge discount once you order your system this week. So let's take a look at what you'll be getting. We've got the tools together for you, and that is a good turn. And thanks, Dan, for the ideas. Stock Trading Success, we've sold hundreds of the system in DVD format, but now we're making it available in downloadable video at a fraction of what everyone else paid in DVDs, because we don't have to pay to ship these and you can download the videos instead. And I would have you look at this review from Stocks and Commodities magazine, in which the reviewer, Jayanthi, said, by the time you're done with all, and she's seen every system out there, right? So she should know, and big thanks to her. By the time you're done with all this, you'll certainly have gained enough knowledge to trade for a living. Look at the word certainly and trade for a living. You can see more on the system at the website. Now, one of the things that let me give you all the link for that. It's stocktradingsuccess.com. And one of the things that I think can help you is to look at all the new videos we've put on the website. One of the things and I got it so that it loads really, really fast. We got an 11-day sale, and the Stock Trading Success system, it's the thing I'm most proud of in the trading industry. I've co-developed this with Steve Nison because it served so many traders so very well. And, even the industry says you'll have gained enough knowledge to trade for a living. And I haven't seen that kind of glowing review from Stocks and Commodities for any other trading system in the world. I also have not seen as many both video and written in testimonials of over 100 traders that wrote in with actual success stories of what they liked. And Steve, this is what tickles me, pink. This is something I really like, is validation that what we're doing is, we're on the right track. We've got so many traders, over 100 have written in telling us how much this system meant to them personally. And any thoughts on this? Because it validates our approach, right? It's basically the proof. It's not us saying it's great. It's the world telling all the other traders, hey, you guys should get on board and order your system too, so it can also do well for you like it did for all these other traders. Of all different backgrounds, of all different, from around the world and everything. We got such what I call a wall of testimonials. And there's more testimonials here than any other trading system in the entire world. Proof. I mean, just look around. No one else has this kind of testimonials. And I'm deeply grateful, as I'm sure Steve is too, for this wall of, people validating the usefulness of the system.
Right. It's actually, while they validated it, unfortunately, due to requirements, we had to take out how much they made.
Right.
A lot of these had dollar figures in them, how much they either made or avoided losing. But, we just for regulatory reasons, we had to take all those out.
Yeah. A lot of these traders are saying, how much they made and all that kind of stuff. But the main thing is you read through read between the lines and see what the overwhelming message of these world's traders is. Now, quick tip here, just for a usability standpoint, I designed this page so that it loads super fast, because I know we got a lot of traders on mobile devices. Over 50% of my traders, according to my weblogs, are on mobile devices. So for that reason, I just have screen caps on this page. But if you click on this red, icon or any of the video links, it will take you to a second page at full videos, and it takes a bit longer to load, but the neat thing is you'll get to see over 20 videos. Just be patient if you load the full videos page. This one has screen caps, so it'll load quickly for the world's mobile device users and everybody, so you can get up to speed on this. Now, what we've done, here's another quick tip, is click on the descriptions of each of these. And again, they're now in downloadable format, and this is kind of nifty to save space. Kind of accordion moves down, and you can click on this, and that's why I say click here on each one, and it describes exactly what you'll be learning. And Steve, any thoughts on this? I know you like mentioning about the hot seats too, but there's so much that's unique in this system that you don't get in any of Steve's other information or in any of my courses. It's unique of Steve and I working together in a live seminar format that we filmed and captured on video for you to learn from. And we worked with real traders with live footage and live markets. We weren't working off PowerPoint slides for the most part. Most of this was live market training for entries and exits for day and swing trades, and kind of give you a rapid fire crash course on exactly how to trade entries and exits and advanced strategies as well. So we had so much that's unique in this that you don't get in any of our other systems. And that's another reason why it's been so popular. So many hundreds of people had ordered it. So, but any thoughts on the video, Steve? Because I know we worked a lot on this.
Some of these video clips, I remember the hot seat. When you scroll down, I forgot the gentleman's name, but it was the hot seat. Yeah, right there. Yeah, can you go over exactly what it is, because that's just such one of the great features on our resource.
Yeah, this is the only place in the entire known trading universe where we were solving traders' ideas. And I got this from idea from a marketing conference I was at, and they were doing hot seats for how to turn around people's businesses, kind of like Shark Tank or The Profit, which are both great reality business TV series. What we did is we had traders come up and describe a problem like, hey, I can't find the right stocks to trade, or I don't know how to scan for my entries, or I get out too late and I take too big stop losses and my wife is killing me. And that's a quick aside, guys and ladies. If you have to conceal your trading losses from a spouse, then you may have a problem. So if you don't tell your significant other how much money you lost in a trade, stop the madness. There's got to be a better way. And what we did here in the hot seats was we had a lot of traders come up and describe their toughest trading challenge. Then we turned it loose on the group, on the entire audience there, and say, hey, do you guys have any answers that would help this trader? And then Steve and I took a shot at answering to help close things up. And so we gave a lot of solutions to common trading problems captured live on video that you can't get anywhere else in the universe. No one else has done this in the trading industry, much to my pleasant surprise. Steve and I are two of the widely most ripped off and copied guys in the industry for good reason. We pioneered a lot of this stuff. And I think to answer your question, Steve, that was a really good benefit to something else that's unique about this. In addition to guys talking about charts, it's how to solve problems for traders, and I think that's a big benefit that everyone here will get once they order their system and they watch the video for themselves.
Right, and one of the great things, and you could see how these volumes are broken down, and they're broken down the same way with the streaming of video, but there's lots and lots of information, but don't let that overwhelm you. I think originally it was a 14 DVD set, but they're broken down so well by topics that you could very easily find any specific area of interest just by looking at the how it's broken down. So like here, volume 2, how to set entries and exits. Volume DVD 1, how to profit from gaps and breakouts. So Ken spent a lot of time making this very, very organized for you to zero in to find the topics and the benefits that you need at that particular time in your trading career. There's some of this you won't need now, but maybe years from now you'll come back to this, because this was designed kind of like an encyclopedia as a resource that you'll be using for the rest of your life.
Yeah, and it's well said because it serves so many traders so well. And I think we only had out of how many, I don't know how many hundreds of people ordered this. We only had two people that had anything negative to say, only two, and one was a forex trader, and the other was a trader from India who was wondering how to apply this to the Indian stock market. So this is for American stock traders and options traders and all that. So you could probably still extrapolate and apply this to other markets, but it's mainly for NASDAQ and New York Stock Exchange swing stock traders and ETF traders, and to a second degree to intraday traders. So, it's really, pleasant to see all the great comments and feedback. Now, another quick thing I'd mention for you is there's a lot of FAQs here. And again, these are all in accordion format, so you can click and get your answers instantly. Kind of a nifty way to not make the page. It's already kind of a long page. I don't want to make it a 300-page long website. So it includes so much in terms of resources for you. Another thing that's a key benefit is that you'll get a year and a half with me every other month. Every 6 or 7, 8 weeks or so, we get together and there's the schedule. You can see there's a session coming up a week from Monday on the 27th on how to combine pivot and breakout strategies. So it's not, a snapshot in time and old information. It is updated by me with you for a year and a half. And we get these spirited Q&A sessions at the end of each of the Stock Trading Success System owners events, and traders will bring charts and bring questions, and I will give you very good, specific, thoughtful, step-by-step professional answers for how to apply what we had originally recorded in all of this to today's markets for the forward year and a half. And there's no monthly charges and no upsells and no cross sells and none of that shenanigans that other people do. You get a solid system at a fraction of what we used to charge for this. So I make it up for numbers now. I got so many new traders on board, tens of thousands of traders. We dropped the price significantly on the entire system as well. So that's good news. Now, here, let me ask, let me first of all mention, here's our bonus vault. And Steve already talked a little bit about the roundtable. Let me ask Steve, here's another bonus that they'll be getting once they order within this next week, and that's the Nison Trading Principles. And that's a streaming video webcast that they'll also get as a bonus. And let them know briefly, how does that work?
What that is as it says here, I've kind of winnowed down the most important trading principles from my 30-plus years of experience in a very short but fact-filled and bullet-filled webcast. It's a video, and it's a great way for you to really get some of my best trading strategies.
Yeah,
I call each of these Nison trading principles.
Right.
These are core principles that I've personally learned from all the trading I've done myself and all the education I've done over the last 30-plus years.
Yeah, and I'll tell you, Steve, too, just a big thank you. I've tested out, I feel like your biggest fan because I've tested out what you've taught. That's why I approached you back in 2001, because I'd been testing out a lot of what you taught back in 1999 and 2000, and it works. So the vast majority of the time it works. And so the principles that you teach are especially valuable for managing entries and exits and combining the candle patterns and developing a kind of a step-by-step plan that makes sense. So it's really good learning strategies as well for traders. Now here's something that's a neat, there's actually two of these recorded just a couple of months ago, what I call kind of a quick start guide. Like if you buy a big screen TV or an appliance, you get one of those fold out quick start guides. Well, I want to make a video quick start guide to help you improve the usability of the system so you know exactly what the blueprint is for how to use the videos and the webinars and give you instruction. So the last thing we want to do is give you a lot of content and then walk out the door like so many other educators do. Instead, I'm here for you guys. And, this is just the beginning step of that. I'll be here with you guys for a year and a half with no monthly charges and nothing at the end either. It's just included free. Every other month we get together for the next year and a half where you can ask me all your questions about how to apply this to live markets and what's going on now. So if the stock market does a correction or a crash, which I've been waiting for the last year. I thought Steve's exit at 2,200 was great. Market continued to run on up. We're still all kind of waiting with bated breath for a big crash. I'll walk you through how to potentially profit from using the inverse or bear ETFs with specific chart examples like the SDS and QID I showed you. And I'll give you specific trigger points as well. Another bonus that you'll get is 2 full months And again, there's no monthly fee at the end. It's you get 2 months. It starts on April 1st and ends June 1st, and that's it. You get 2 entire months of my Saturday webinars with a members area, and there's a preview if you want to look at it that gives you weekly picks and 30 minutes with me personally and Q&A at the end. So you get that for 2 months. That's my premium swing scans. Normally a subscription service, I'm including 2 months for you guys. And there's a video that tells you all about it and what it does. And for the first time ever, I'm including 2 of my best-selling downloadable courses, 10 hours of additional training for how to trade gaps. I'm a professional trader and I trade gaps as my favorite pattern. So you get 6 hours of me on which gaps to take, how to set entries, how to manage stops, how to avoid gap and traps or gap fills or gap reversals, all the rest of it, the specific criteria to use. And then also my downloadable 4-hour course called Swing Trading Success, and that's a 4-hour course. Now, for any of you who are my customers who are already members of Swing Scans or I know many of you have all of these, I'll give you credit towards any of my other courses. So I'm very flexible. If you already have one or more of these things, you can get something else instead. Just pick from my store and I'll be happy to get you access to that. So that's many more bonuses. And also, Paul is mentioned too that you guys will get a $50 Candle Charts Academy gift card bonus. So once you place your order, what I want you to do is place your order and then forward the confirmation email to Paul at Candle Charts, and he'll give you information on how to redeem your $50 thing. And I serve the best price. The best thing for last is the price is only $6.95. This is obviously a $19.97 or $14.95. It should be up at the $2,000 mark range, but it's only $6.95 for the download version when you use the coupon code SAVE. But I'm going to teach you how to use the coupon code because it's really nifty. There's a little trick you got to use to, well, not a trick, but it's directions on how to use it correctly. But before we do that, let me share with you and ask for Steve's input to the bonus, kind of what we call a bonus stack, or all the stuff you get. So you get a total of over 42 hours, but like Steve said too, consume at your own pace. You don't have to. It's like you get a whole Costco box full of stuff, but this is professional. It's not going to add to your waistline, but hopefully it'll add to your bank account, all right? And you get 42 hours. That was well said. I should remember I said that anyway. 42 full hours of pro training. You get the course, 17 hours. You get follow-up webinars with me, at least 9 hours worth. Swing scans, 4 hours. 2 hours with Steve, and 10 hours of those 2 downloadable courses. So that's over 42 hours of training you get. And retail price stack on that's $25.59, and we're making it available for less than we originally launched the course at, which is $9.75 a few years back. Now it's only $6.95 because we're able to do it in downloadable version. But I guess Steve, any thoughts on the value that they're getting and the price point? Because we've made it priced to sell. You know, we've helped so many traders as a team, and I'm really pleased to be, on the team with Steve to be able to share with you good professional, intelligent, professional grade, pro grade advanced training that can help you combine the best, not only candles, but Western technicals and make sense of it all for less than the price of a couple of blown stops. So that's a really good price for all of what you're getting. You get the entire downloadable system and everything else. There's a preview of, you can take a look here. You get all these videos in a download area. It's 16 gigs of content, 17 hours, plus ongoing webinars, plus additional bonus downloads from Steve and I. So it's a heck of a great deal, and normally we wouldn't offer it at this low because for years we had offered it at the $9.75 up to $12.95 or $14.95 at its peak, but now we've dropped the price significantly, so it's only $6.95 when you order by March 26th. That's a week from Sunday, to give you 11 days to decide on this. But Steve, any thoughts on this? Because I'm really pleased to be bringing training of this quality to help the traders at a great deal. And there's no upsells and no extras and no monthly continuity or any of that kind of stuff. It's a huge bonanza package of content that's professional grade, that actually very useful for much less than we should ask for it. So it makes kind of an irresistible offer, I would expect.
And now there are no upsells, Ken. You also give ongoing education. As you mentioned before, it's not just, you'll get all this great resource and then we'll forget about it. We'll forget about you. It's ongoing education. That's something that's we get a lot of requests for. Okay, I have the resource, but I want to continue my education. So the bonuses you're giving, Ken, are great. That allows the students to have ongoing education. And the streaming is also great because it's instant access. The DVDs were great, but you have to wait at the mailbox to get the DVDs. Here, you'll get the information instantly to watch it at your convenience, viewable on any resource. You don't need a DVD player. All you need is the ability to watch videos on whatever device you have. So it's the best of all worlds. And like I say very often, this is a great return on investment. So you have the volumes of information, hours of information, easily digestible in bite-sized pieces, very well organized, instant streaming,
No, actually,
ongoing education.
Steve,
So,
just a correction. It's downloadable,
okay.
not streaming. So they are
Downloadable. I'm sorry. Yeah, downloadable.
You can
Once you
stream it after
download
you
them,
download it. Yeah,
you'll
after
be
you download
able
it.
to watch them as soon as they're downloaded.
Right.
Right. Sorry.
No, that's fine. I know you guys do streaming. I still do downloads because I know a lot of times people, you may want to copy it, and you can feel free to copy it, to your laptop or your cell phone or multiple computers once you download all the content. So that's another good tip. So sorry to interrupt, but yeah, back to you.
Right.
Steve. Any thoughts on this?
And that's why it plays on any device. Yeah.
Yeah, and it's I think with all the content that we've got, and the proof of all the world's traders saying, and I'm really grateful to all these folks, and thanks if any of you are out there watching. I know many of you stay with us for many years. We really appreciate all the people who've written in and telling us how much this has benefited them. So it's a good system and it's a great deal, right? It's it's only $6.95, and that's a drop in the bucket compared to the value that you're getting with ongoing training and downloadable courses, webinar with Steve, quick start guide, the entire 17 gigs of content to download. What I want you to do now is bookmark the site. It's at stocktradingsuccess.com. But what I want you to especially do is pay attention to this. We'll wrap up with this. To enter your coupon code, when you click the order button, okay, and I know you all will because it's a great deal, right? It's something I'd be proud to buy, and I'm proud to offer it with Steve because he's the best. You add to cart, and that will take you to this page, and it still shows $10.95. The coupon code is SAVE. So you type in the word SAVE. That's what I want you to do next. And by the way, there is a graphic with information on how to do that. Here's how. I even made a screen cap of step-by-step directions because I know if you're like me, maybe not familiar with coupons too much. But anyway, you type in the word SAVE. The main thing is click the apply button, and that'll drop the price all the way from the $10.95 regular retail down to $6.95. So it's a really neat way to save. So just again, you type in the word SAVE because that's what you do. You click the apply button. Once you see the price is $6.95, then you can check out with either PayPal or Visa or MasterCard or other credit card of your choice. So it's a really good deal, and it's only $6.95. It's not, this is definitely, I know a lot of these top marketers sell their info products at $19.97, which is a nice price, but it's kind of out of reach of a lot of our traders, especially those traders who are in other countries for whom the exchange rate, like Canada comes to mind, right? I got so many Canadian traders, and the Canadian dollar is down, and so to help the world's traders, Steve and I are making this available, and also because it's downloadable instead of we have to ship DVDs, this is downloadable, so much easier for us to fulfill, and you can get access. Just give us 24 hours to get your login and password to the download area, and then you'll be with us, as system owners. So 16 gigabytes. Give yourself some time to download it. You get plenty of time to download it, and you'll be able to order your system right now. So with that, I wanted to thank all of you for joining Steve Nison and myself. We will get the replay of tonight's video posted later tonight up here. I'll get that up here on a YouTube video right up here. So it will be playing up near the top of the site within a few hours, and you'll be able to watch it at your convenience to help you make a decision. But Steve, it's a real pleasure to work with you. You're so smart. What you teach really works. And so
great work with you, Ken, and look forward to getting some success stories from our students.
Yeah, it's always great to hear. I always like Steve and I always like to hear the write-in success stories and testimonials from traders once they get it and start to apply it. And again, like Steve mentioned too, one of the big benefits to this is there's no ongoing monthly fees, and but also you get ongoing coaching support, which is unheard of in the industry. Usually there's a monthly fee attached to ongoing support, as well there should be, but we're trying to make it an irresistible offer. So I'm with you for a year and a half. Every other month we get together like clockwork. We get lots of questions from our system owners, and we can pull up charts together, figure things out. I give you answers with specific entry and exit criteria and other information to help you for a year and a half after you buy at no additional cost. So inconceivable for the fellow Princess Bride fans out there. Anyway, it's a great deal. So I look forward to working with y'all as members of the Stock Trading Success System. And thank you so much, Steve Nison, for working together. We'll see you guys on the inside. And until next time, trade with passion, trade with little tiny stops, and try to trade to make as much money as you possibly can. Thanks so much, Steve Nison, and thanks to all of you. You guys have been amazing. Great to see you here. Order now. Remember to use that coupon code SAVE so that you can knock your price from the $10.95 all the way down to $6.95, and it's yours. So thanks so much for being here, and we'll see you guys next time. Thanks, Steve, for joining me.
Thank you.
All right, we're going to wrap up tonight. And thanks, everybody. It's great to see everyone here. And a question from a trader, can I give you a summary of what you'll get? Yeah, just look on the website. It's got all the bonuses and all the information in dozens of pages. Just a reminder, to watch the preview videos, click on any of these, and that will take you to a page. Give it a minute or two to load that has dozens of download or dozens of streaming videos. Just give it some time. This page I wanted to load fast. We just have screen caps here. Just click on this, and that'll take you to a page that says stocktradingsuccess.com/full-videos, and that'll show you the streaming videos so you can watch those at your leisure. So look forward to seeing y'all as new members of Stock Trading Success System. Thanks and good night. And good night, Steve. It's good working with you as always.